And good morning and welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 5th of June. Hi, Phil. How are you?
Good, thank you very much, Andrew.
Right, we're not in the same office today. Obviously, VSA Capital has moved office for a while, and some people are working from home, and it's the summer, and it's all going to be a bit chaotic. But there we go. What are we going to talk about today? Actually, there's a lot of chatter which is quite interesting, actually, for our space at the moment. Obviously, we've got Rachel from Accounts is doing a spending review, and it looks as though, which is quite interesting, the first 12 months of Labour in power, they basically did everything they said they wouldn't do. And now it looks as though she's doing a complete U-turn and spending like mad, back to classic socialism. Spend, spend, spend. But the trouble is, where does all the money come from? But it is going to help and change some of the sectors. I'm sure we might as well mention a couple that are quite interesting. Obviously, defence is going to be a big spending win, isn't it? And all those submarines they're going to build. I noticed that Royce now has a market cap of 75 billion. I'll tell you what, 119 years ago, when it was set up by Mr. Rolls and Mr. Royce, I bet they would never have dreamt it would get to that size.
I don't think so, and I think that shareholders, when it was down at £1, wouldn't have thought it got to where it has done as well.
It's been amazing. And of course, on the submarines, a little one, Chesterfield Specialist cylinders, which is the ex-Pressure Technologies, and had their results the other day. They will do very well out of submarines. And it does make you think, actually, they're building all those big submarines, big long-term defence contracts. How long do they stay independent? What do you think, Phil?
Well, they're a big supplier into BAE Systems, who are building the submarines, and obviously their, Chesterfield Special cylinders, their massive cylinders were used on the Dreadnought class of submarines that BAE were building. So they are a key supplier into BAE.
I'll tell you, so we'll see that. Anyway, a few other little things that have caught my eye whilst I've been away. Obviously, I've been away in Cornwall and New York, two completely different places. There's a lot of chat about the boss of Heathrow Airport having his phone on silent at night, and I'm like, why is everyone being so critical about that? Because actually, I put my phone on silent during the night because you don't want to be woken up the whole time with your phone going off and buzzing away. But there is this old-fashioned thing called a landline. Maybe people have forgotten. And if you ring the landline, it does make a noise. So that's your emergency line, isn't it?
Very good there, Andrew. Good spot.
We'll stay on airport news as well a little bit if you want, because actually this week I just finished watching on TV the bombing of Pan Am 103. I don't know if you watched it.
Yeah, I've not seen it yet, but you've seen
it. It's a really good program. It's funny enough. I used to fly Pan Am a lot in '87 and '88 when I was living and working in New York. And luckily, I suppose I moved back to the UK because I could have been on that flight otherwise, because it was in '89. But it just made you really think, God, how, and again, a lot of it is technology, and we've been talking a lot on this podcast, airports and air travel has changed so dramatically, and how you forget what it used to be like. The idea that you could put a bag with a bomb onto a plane in Malta and it transfers in Frankfurt and London and then blows up. I mean, it just couldn't happen in today's world. But things have changed dramatically. And of course, we've spent a lot of time on this podcast talking about Origo that can automate the whole of the airside, which is the next big move. And actually, whilst we've been talking about it, the share price has gone from 40p to £1. So I hope people were listening to us. But also an interesting one, and whilst just talking on that one, there's a fantastic, if you go onto their LinkedIn page, there's an amazing interview with the CEO of Swissport, which is basically one of the biggest operators of airports in the world. He's doing an interview with CNBC and basically says, look, what Origo have got is what we need and what the world needs, and it's going to happen. And oh my God, this is incredible. I know in the past, I've just talked about the total addressable market, the TAM. The total addressable market for autonomous airside is just in the tens of billions. And these guys are world leaders. So I found that very interesting. It's amazing what comes out of just watching the TV, isn't it, Phil? Actually, whilst watching the TV, I don't know if are you a Doctor Who fan?
Yes, I like Doctor Who.
I'm not sure about this. I mean, I don't think and I can't pronounce his name properly, but
Yeah.
Nakuta. What's it? How do you pronounce it? Anyway, the old Doctor Who. Obviously,
Yeah.
he's regenerating into Billie Piper. Actually, they haven't necessarily said that she is the new Doctor. They simply said that she will be in the new series. So it's sort of an assumption, but I think it's true. I'm not sure about that. But anyway, that's not really tech and trans. Although Doctor Who, I suppose that is tech and trans. I mean, he has some amazing tech.
Exactly.
I mean, if you could actually copy his TARDIS somehow, well, that would be amazing, wouldn't it?
Well, be good for our new office, Andrew.
Yeah. Anyway, I'm sort of rattling around here. Actually, there's one more rattle around I'll do, sort of thing. Because I spotted, I think it was this morning, that apparently 500 million worths of energy from wind power in the UK is wasted every year because we don't have enough battery storage. Well, we know a lot about battery storage, Phil.
We
But
do indeed.
in fairness, since you did your podcast last Thursday, Invinity Energy Systems did actually have full year results on the Friday. Full year results don't say too much, to be honest with you. I think most of that was all known. But there's a few other things on top of it that are worth just commenting. I think next week we may start to hear news about bids going in for the cap and floor. This morning they announced a new NED, a very nice lady who has come out of Rolls-Royce, actually. So I think we'll have some really good experience. I'm just trying to search through the back of my sort of memory here because I should know her name off the top of my head, shouldn't I? What's her name? Can you say it?
No, go on.
Come on. It'll come to me in a minute and I'll suddenly say it, or I'll say it as I keep talking. Because the other thing is that some people may have noticed is that her name is Margaret Amos. That's it. Dr. Margaret. She's a doctor. Dr. Margaret Amos. There's some state building going on in Invinity Energy Systems with some Indians. They announced a 3.9% stake. They then announced a 4.25% stake. Actually, I do know the people behind this, but if people want to understand more about it, they probably ought to contact me directly rather than me going publicly on air where everybody can hear what's going on. So there's actually, you know what? When you get news out of companies like buses, it often comes in threes. So watch this space. But that was it. Yeah, a bit of good news, I think. And actually, there's a little bit of, there's a little bit of activity going on in the market. Volumes in the small caps just starting to build up a little bit at the moment. So, who knows? It could be quite a good, interesting summer. Could be. You got any other general thoughts?
Yeah. Well, so there's an article in the FT today about more investment funds moving away from the US and into Europe. So hopefully some of that will trickle down.
That's true, and it doesn't need an awful lot, does it? If you just take out 1% from Apple or 1% off all the big seven, you could probably buy the entire UK market.
Well,
certainly buy the entire UK small cap market. So yeah, I agree with that. I think there is a little bit of positivity around.
There is.
And we're seeing obviously inflation come down in Europe pretty rapidly, and so interest rates in Europe are going to come down. They're talking about interest rates in Switzerland going negative again, which is great for swaps traders. It gives them a one-way bet, basically. So, and of course, inflation is coming down in the UK because the ONS or whatever that does the inflation admitted they made a mistake, and so they've had to bring it down because of the mistake. It's not coming down for reality. The inflation hasn't, but the people who calculate inflation are bringing it down because they got it all wrong. So, and I think we're due. I think if interest rates hopefully start to come down, equity market could start to look a little bit bubbly. Yeah. So actually, get a bit excited.
There we go. And we've been some reasonable trading updates coming through have continued to be fairly positive. I mean, just quickly, I'm interested in your thoughts on this. I saw an article on Reuters, and obviously, we're taking transitional energy, but VSA focuses on mining as well as a core sector. Reuters report, and this was from the European Auto Supplier Association, CLEPA, saying that now it's seeing several production lines in automotive running out of supplies because of controls on rare earths out of China. So that was quite interesting to see that finally sort of having an impact. I don't know your thoughts on that, Andrew.
Well, I think look, obviously we talk about a lot about this on the 5 Minute Morning Miner, but there's no question doubt that China has a very dominant position, not just in rare earths, if you know them, but critical metals.
Yeah,
And the world is waking up to the fact that actually you've got to have critical metals, otherwise, well, nothing works basically. And so people are now, the new sort of war, it used to be we'd fight over oil. Oil's becoming a bit historical now, and people are going to fight over critical metals. And at the moment, China is the dominant player. We know the US, you can hear it when they do things like, trying to do a critical metals deal in Ukraine. They're talking to the DRC to stop the M23 rebels. We'll do a critical metals deal with you. And so people are desperately searching for critical metal resources. But you do also need the processing capability. And that's where China is really strong. They've got the processing capability, and they can do it at an incredibly low cost. But again, this is slightly historical, but VSA Capital, when I took control of it about 15 years ago, we were a natural resources house. And it was when natural resources were getting so difficult in sort of 2014, 15, that my theory was, look, we're heading towards an EV transitional world. And actually that, I started off by thinking that means we need lithium. Right, let's find every lithium mine, which we did, and we started marketing them. Of course, everyone said to me, Andrew, no one is interested in lithium. Well, they bloody well are now. But that's sort of how we got into transitional energy, was from natural resources. And obviously you're in transitional energy, technology sort of comes with it. And then we hired you as well, Phil, so we had to.
No, thank you very much, Andrew.
But that was how the two, you can't really do transitional energy unless you understand critical metals. The two go so neatly hand in hand. That's why I think this is a bit of a sell point for VSA Capital, why we are actually a very unique sort of firm, because there are very few firms in London that really understand critical metals because they have a very good mining team, and understand transitional energy because they have a really good transitional energy team. If you go to some of the other, there are one or two other, should we call them boutique mining houses that perhaps are quite well known out there. Some of them, recently had court cases and things against big gold companies. They don't do transitional energy, and yet we do, and that we can link together the critical metal with the end product, and that actually gives us a huge advantage over them. And at the generalist brokers, again, they're all very just single sector focused in each little pod. We've done it all together. It does actually put us in a much stronger position. And obviously, again, selling VSA slightly, we now have this tie-up with Drakewood Capital, which is being an asset manager, credit fund manager, futures manager, and doing a lot of other things in the natural resources space. And they do want us to carry on with transition energy because they totally get that. So we are actually, as a business, in a very unique position and growing very nicely. Thank you very much.
There we are.
There you go. That was a bit on VSA. Wasn't expecting to talk that one, but you got me going on it. Anyway, I am slightly biased. A little bit.
Before all
the listeners get completely bored of me ranting on about that. What companies do you want to say? Well, these have good results, these have bad results, whatever you want to do. Your usual bit. Come on, get onto your usual bit.
Let's have a look.
Rattle through quite quickly so we don't get people bored.
I will indeed. AFC Energy. So AFC's ticker, 103 million market cap, shares up 18% year to date, and they develop electrolyzer technology for hydrogen. I just saw an announcement this morning. They've signed a joint development agreement with an undisclosed industrial, an S&P 500 company, to develop a range of it's quite interesting, large-scale ammonia crackers for hydrogen production. So they've got, so this is technology that they own, have got IP around that, for producing hydrogen from ammonia. And ammonia is also considered an enabler for hydrogen because you can transport ammonia quite easily, but then process it to produce hydrogen using AFC technology. So that was quite an announcement for them, I thought.
It always has been a little bit their aim, if you go back quite a few years, to have this ammonia capability. At the end of the day, though, I'm perhaps slightly out of touch because we used to act for them. I've acted for them twice actually over the past sort of 15 years. They are still, for want of a better word, a bit of a clue in the name, isn't it? AFC. They're an electrolyzer company, which is tough. But don't get me wrong, this is good news. I'm not knocking it at all. Probably we ought to, particularly since it's got new management now.
Yes,
we probably ought to go and have a little chat with John Wilson, the new CEO.
Yeah. Well, I thought that was anyway. It's a good little announcement this morning from AFC Energy.
Actually, I'll tell you what. I've just looked at the announcement as well. I see the FD's changed fairly recently. I hadn't spotted that.
Yes, it's new management. So
it's completely new management, because obviously we knew the old FD.
Yeah, there we are.
Because he'd been at Invinity. I hadn't spotted that he had. I must have been away on one of my trips or something, and missed that.
There we are.
So yeah, there you go, Phil. Go and give them a buzz and say, look, because to be honest with you, we've not been the most positive on this company. And so if you're going to convert anybody, you can't convert someone who's already a buy. But maybe they can convert me into saying, actually, it's looking really interesting now. So why don't you go and fix up a meeting with her?
We'll see what we can do, Andrew. Right.
Anyway, carry on. Sorry, that was me doing VSA business again on an open podcast.
Exactly. But very understandable. But just moving on. And this is, we mentioned Chesterfield Specialist and defence. Chemring Group, CHG is a ticker, one we talked about before. Market cap's now 1.4 billion. The shares of Chemring are up by 46% in 12 months. They have their interims. Chemring is one of our leading defence companies, cybersecurity, electromagnetic, electro warfare specialist Chemrings. But also they're very well known for countermeasures and materials for defence, i.e. propellants. So they have their interim results. They were just sort of headline numbers. The revenue is up by 5% to 235 million. EBITDA up by 12% to 39 billion. What was important, caught my eye, was their order books. Chemring's order books are up by 25% to 1.3 billion. So record order intake. And they said that particularly strong growth from countermeasures and energetics revenues up by 20%. But within energetics is like propellants, so it's for missiles and explosives. But they'd seen really strong demand, and they said that also they'd had a new order in a period valued at $106 million for a US missile program. So things you can read further about Chemring, but obviously doing very, very well from the defence sector in the UK. Move back onto smaller caps. One we've not really discussed much before was Synectics. Ticker's SNX, 57 million market cap. Their shares are up by 80% in 12 months. And this is security and surveillance, protecting property and assets around the world. They had this is just, I think, is a trading update. It's a contract, so it's 5-year extension to existing contract. And it's with one of the large gaming resorts. So obviously gaming resorts, not that I visit very often, getting a bit too old now probably, but they use a lot of surveillance equipment on the gaming floor. So that was Synectics. Another one, Andrew, I saw was Eleco, and this is a company we discussed before. Software companies doing really, really well. Ticker's ELCO, 135 million market cap. Now shares are up by 40%. And they develop software for the construction industry. It's an international company now. They've got operations in the UK, Ireland, Sweden, and Germany and Holland. And this is, it's software. It's a whole building life cycle. So this is from initial design in construction through to actual build itself and fit out, and then managing the assets thereafter. So really important for the building construction industry. They have an AGM update. All very positive, staying in line with market expectations, despite the construction market is pretty volatile at the moment, but they're trading very positively. Forecasts out there. This is analyst forecast for revenue of 39.6 million for the year, up from 22% in last year. So good progress from Eleco. And I guess finally one from me is Superseed Capital. Client of ours, small cap, but so this is a Superseed Capital as a feeder fund into Superseed, the private AI fund. So a good way of getting exposure to smaller AI, so it's seed investment into AI companies. So portfolio revenue in the first quarter was slower than fourth. It was up by 4%, but overall, nonetheless, revenue grew by 44%. But what sort of caught my eye here with Superseed was that they made 3 new investments during this quarterly period. But also there were 5 follow-up fundraisings done in their portfolio companies that were done at premium. And one of those that's going particularly well was ThinkTrax, which I saw yesterday at the NEC, Smart Manufacturing Expo, and their software is used in manufacturing. They're making good progress as well. So I thought just overall reasonable progress there from Superseed Capital.
They're actually doing a pretty good job. And Mads Jensen, the CEO, I think he's very talented. I must say, slightly biased, as you said, it's corporate client. I actually did participate in some of it at IPO myself. The problem is, of course, is that it's so small, there's no liquidity. And it trades at a discount to NAV, quite a large one, actually, to be honest with you, nowadays. But they're pretty much doing what they said they would at IPO. The NAV is going up. It's a very interesting situation for someone to look at. If you, I mean, it's sort of early stage AI, SaaS type stuff, isn't it? Which is actually just where you sort of want to have your money.
It is.
And they also, they've got this deal with the British Business Bank, haven't they, where you get this sort of waterfall gearing. So it's really, really interesting. But I guess, you've got to be a patient investor if you want to do this. And you should be a patient investor. That's what I am. It's in my SIP. But yeah, I think for a SIP, and if you say, well, look, I'll hold it for 5 years, and at the end of it, you're probably going to make quite good money, and just ignore the share price. The share price is simply telling you can come in at a massive discount to NAV. Well, that should be great. If you said to somebody, look, this house is worth £2 million, but by the way, today you can buy it for 1.5 million, but you've got to go and live in it for 5 years before you can sell it, you'd probably do it, wouldn't you?
Yep, it's a really interesting situation.
But with equities, because there's a bloody price on the screen, everybody thinks, God, the price on the screen, the price on the screen. Ignore the price on the screen. Prices on the screen are wrong the whole bloody time.
Well, there's some super little companies in there. Really good UK AI companies. I mean, they've managed to get me
going. Right, here we go. That's it. We'll call it a day, though. That's plenty for now. And we will... we'll probably be back next week. All right, thanks, Phil.
Okay, well, chat next week.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.